All right. Today we are going to be starting short-term decisions, and it's a very important topic in performance management, especially as it starts to do with managerial decisions. All right. So, of course, under this topic, we are going to be dissecting the concept of discontinuance of a segment. We discuss make or buy decisions. We also talk about special order. All right. So let's take it one after the other. Please, you can open to the material at your end. All right. So what do you understand by short-term decisions? Simply put, short-term decisions represent the application of marginal costing technique and the principle of relevant costing to analyze a particular course of action in making managerial decision. For this purpose, we can say that marginal costing technique is a concept that is designed principally to compare the benefits arising from a course of action with its associated relevant costs, whether it will result uh, in a saving, deficits, or contribution to the organization. All right. So you use, when it has to do with decision making, we use the concept of marginal costing technique to support managerial decision. You can also say that marginal costing technique is a behavioral classification, or you can call it uh, cost benefit analysis, in that a cost item, okay, uh, management may wants to know whether a particular, whether the benefits associated with a course of action will outweigh its relevant cost. All right. Not only that, marginal costing technique is also a behavioral classification of cost. All right. Which state that a cost item must be capable of being classified as either variable or fixed cost. All right. Some of these we've discussed it under operating statement. That is on one side. On the other hand, relevant costing or relevant costs are costs that are directly attributable to a particular course of action in making managerial decision. They are costs that will be incurred purposely as a result of taking a particular course of action. Under short-term decisions, marginal costing technique and the principle of relevant costing will be used together to analyze a course of action in making managerial decision. So, what do you understand by decision making? Decision making is just a selection of a course of action from among different alternatives. All right. When you have several options, so the process of selecting, of making a choice out of several options or alternatives is what is known as decision making. However, uh, basically there are two angles that we are going to be looking at as far as short-term decisions is concerned. Anything you want to discuss under short-term decisions will be critically examined in two different perspectives. One is the qualitative perspective, the other one is the quantitative perspectives. What do you mean by quantitative perspectives? The quantitative angle of the decision is also known as quantifiable, monetary, and economic angle of the decisions that is to be taken. It involves the process of comparing the benefits from a course of action with its associated relevant cost, whether it will result into a saving or deficit, profit or loss, or contribution to an organization. Simply put, when it has to do with quantitative or economic angle of the decision, it's all about the calculation that you need to do. All right. It's all about the calculation. That's what we say it is economic, it's quantitative, it's quantifiable. All right. That's basically the calculations that you are going to do. Then the second one is a qualitative factor or qualitative perspective or angle of the decision. Of course, when you talk about qualitative angles, it represents the non-monetary, all right, non-quantifiable, and then the non-quantitative factor of the decision that is to be made. They are those factors that cannot be expressed in monetary terms. All right. So the qualitative factors are the factors that cannot be expressed in monetary terms. All right. However, the quality of the decision that is to be taken will surely have far-reaching effects on the performance of the business in the marketplace. Why? Because a bad decision can have material effects on the performance of the organization. A bad decision can result to financial losses. It can impair the ability of a company to take advantage of market condition. Not only that, bad decision can impair the reputation of an organization. And that's why it is important that the decision that is to be made should be brought to the attention of the management and allow the decision maker to provide requisite guidance in order to avoid any wrong decision being made. Because you, as a management accountant, you can't be the preparer of the reports. You are the one that will make recommendation, suggestion, provide advice or expertise, and then you cannot be the one that will also make the final decision. So you allow the decision maker, even if you are so strong within your organization, you allow the decision maker to make the final decision. All right, because if anything goes wrong, you'll be held liable. The consequential effects of whatever go wrong may be massive, and that's why it is important. Okay, you provide that recommendation, allow others to contribute to make the final decision. All right, so that is basically that. Finally, before we begin to talk about each of them, you will recall that when we had the first class, under operating statement, I mentioned that managing marginal costing technique is a technique designed principally to aid managerial decisions. So that is, when it has to do with decision making, you need the knowledge and the experience of marginal costing technique to support managerial decision. So examiner can ask you, what are the areas that marginal costing technique can be applied to an organizational decision making? All right. So examiner can ask you that. So you should be able to provide explanation. All right. So let's talk about areas of application of marginal costing technique. So you can say that marginal costing technique can be applied to making managerial decision in the following areas. One is deleting of a segment. Deleting of a segment is the same thing as discontinuance of a segment. Two is make or buy decision. Three, shutdown of capacity. Four, adding of a new segment. Five, special order. Six, okay. Six, pricing decision. Okay, pricing decision. Then seven, CVP analysis, cost, volume, profit analysis. Then 8, optimal product mix decision, optimal product mix decision. Then 9, linear programming. Okay, so these are some of the ways or some of the uses of linear programming. These are the areas that you can apply linear programming to make managerial decision. Okay, so most of them are they are topics on their own. So when we get there, we are going to be discussing them in details. However, our focus will be on the deleting of a segment, make or buy decision, as well as a special order. All right, so let's take it one after the other. So what do you understand by discontinuance of a segment? Before I give you what deleting of a segment is all about, let me just use let's do some kind of explanation to this so that you understand the basics. Let's say, for example, we have a company has products A, B, and C, and then the profit or loss for product A, say, is 5,000, product 2,000 loss, product C, 3,000 profits. So because of the fact that product B is operating at a loss, management may be contemplating to discontinue producing product B. Product B has a loss of 2,000. So because it is not profitable, management may decide to may be thinking that, okay, let's close down product B. Let's close down segment B so that we can focus on the most profitable segments within the organization. So this is basically the reason that we make management to be thinking about discontinuance or deleting of a segment. So we can then go back. Let's do the explanation proper. Now that you have the idea, the main reason that will make management to be contemplating that. Now, when it has to do with discontinuance of a segment, often within an organization, especially a manufacturing company, management may be thinking on whether or not a particular segment, including products, type of customer, geographical distribution or channel of distribution, geographical location, should be discontinued. So the decision to discontinue a segment from the fact that the segment is operating at a loss. The only reason that will make management to be thinking of closing down a segment is if the segment is operating at a loss. The reason why I'm saying this is that on the day of your exam, examiner may not tell you, you may not be given the income statement. Once you can see indication in a question that the management of the company is contemplating of dropping a particular product or a segment, or you are told that the company wants to delete, or the company wants to discontinue, or the company wants to shut down, and you are asked to advise, you should know that this question relates to deleting of a segment. So under deleting of a segment, there are two things that you are going to do. You recall earlier, I mentioned that anything under short-term decision will be critically examined in two perspectives. One is economic angle, Now, the second one is qualitative factors. All right. So the same thing under discontinuance of a segment. When you want to advise management on whether or not they should delete a segment, you need to analyze it critically in two perspectives. Under the economic angle, you want to know, say for example, like my hypothetical figures that I have here, for this product B, you can see that product B is operating at a loss. Management is now thinking of closing down product B. So when you now want to advise the management on whether or not they should close down product B, you need to examine this product B, this segment B, in two perspectives. First thing first, you must carry out the economic analysis. You must evaluate critically product B. Then thereafter, you now state the qualitative factor that may arise as a result of closing down product B. So under the economic angle, we said that the quantitative perspective represents the process of determining the economic and financial viability of the affected segments, whether it will result in a positive or negative contribution to the organization using income statement or contribution margin approach. What we are saying is that this affected segment, say for example, this product B, this affected segments, when you want to carry out the economic analysis, what you are supposed to do is to compare the sales value from this segment B. You compare it with the relevant cost of producing segment B, whether it will result in a positive or negative contribution to the organization. That's what you need to do. That's what you need to do under economic angle of the decision to discontinue a segment. All right. Now, of course, these formats can aid your understanding of what I just said. So whenever you want to, under deleting of a segment, you are supposed to prepare income statement or contribution margin statement. The first item will be the sales value from this format. After that, you compare it with the relevant cost. You recall what I mentioned, what I said when we started under the introduction. I said under short-term decisions, marginal costing technique and relevant costing principle will be used, okay, will be used together, all right, to analyze the cost of action. So basically, we are going to need the contribution analysis. All right. So after you have determined the sales value, of course, the sales value will surely be given to you. If not, there will be information for you to compute it. Then you need to compare this sales value with the relevant cost of the affected segment. All other profitable segments are not affected. So you need not, don't do anything. You don't need to do anything with other profitable segments. Your focus will be on the affected segment that is generating loss to the organization. So to do this, I'll need to calculate the relevant costs, all right, of the affected segment only. To get the relevant costs, I will consider direct material, I will consider direct labor, direct expenses, variable production overhead. If I have any opportunity cost, I will consider it. So if I'm given any direct, incremental, specific, or attributable fixed cost, whatever it is, provided the cost is relevant, I will consider it. All right, I will add up all the relevant costs. I will less it from the sales value. Then that will give me either positive or negative contribution. That's all you need to do. I repeat, for economic angle under deleting of a segment, the most important thing you need to do is to compare the sales value with the relevant cost of the affected segment, whether it will result in a positive or negative contribution to the organization. So after you have done your calculation, be it positive or negative, you are expected to advise the management. Therefore, let's talk about the decision rule. All right, let's talk about the decision rule. What are you supposed to say? Whether it is positive or negative. Now, if positive contribution, if positive contribution, do not delete the segment. Why you don't want to delete the segment? Because the segment is contributing positively towards the recovery of the company general fixed overhead and then net profit. You know that when you want to determine profits, you are expected to less you are expected to less fixed cost from the contribution for you to get profit. So if it is positive contribution, it will enable the company to absorb the fixed cost that has already been incurred, and it will also contribute towards the net profit. So that's why we are saying here, under deleting of a segment, if your contribution margin is positive, your advice should be that the company should not delete the segment, because the segment is actually contributing positively towards the recovery of the company general fixed overhead and then net profits. Then number B, if negative contribution, then your advice should be that the segment should be deleted. If it is negative contribution, the company should delete the segment. Of course, this will then increase the overall net profit of the organization, because that negative contribution is depressing the net profits. So it's depressing the net profits. But once you delete the segment, the profit, the overall profit will then increase. All right. So that's what you need to do. Once it is negative contribution, then you need to delete the segment. Then, of course, number C, where there is zero contribution. The zero contribution will arise where the total sales value will equate the total relevant cost. So when this happens, the company can either delete or not delete the segments depending on other qualitative factors. All right. Once your contribution is zero, then you are at liberty to either delete or not delete depending on other qualitative factors. Now, anything you want to do under short-term decisions, especially on the day of your exam, it's expected that you are going to, after your calculation, you have to state your qualitative factors. Whether you are asked or not, whether examiner asks you or not, you have to state your qualitative factors. So what are the qualitative factors you should look out for under deleting of a segment? Now, like I explained earlier, under these my hypothetical numbers, you can see product B or segment B is making loss of 2,000, and the management is thinking of closing down segment B. Therefore, because I don't want you to cram it, I don't want you to cram the qualitative factor. You should be able to, to discuss that. All right, you should be able to discuss. You should be able to explain yourself or to express yourself the way you want. So now, when it comes to qualitative factors, you should think about this product B or this segment B. What are those factors that the company will need to take into consideration before they finally delete it? All right. What are those factors? So when you are stating your qualitative factors, you need to link it with a question. Don't make it generic. Don't just cram qualitative factors and then go and dump it on the day of your exam. Just do it anyhow. No, you need to link it with a question by mentioning the name of the company, mentioning the products, mentioning the impacts. So whatever, just link it with a question. Don't make it so generic. You just cram what you have in your textbook or wherever, and then you dump it on your answer booklet. No, don't do that. You need to link it with a question so that you can maximize your score. All right. So let's talk about few of the qualitative factors that has to do with deleting of a segment. Now, you want to delete a product, for example. one of factors that can arise in relation to the closure decision is how it's going to affect the corporate, the corporate image of the organization. How is it going to affect the reputation of the company? All right. If you delete this product B, for example, what impact will it has on the image or reputation of the company? All right. So you need to consider the impact of the closure decision on the company's reputation. Then two, the impact of the closure decision on the company's turnover should be considered. All right, vis-a-vis where the affected segment is jointly demanded with the company's other products. Say, for example, product B and C, customer usually buy product B and C together. All right, when you say joint demand, they are products that must be bought together. All right, just like you have a marker and board, marker and whiteboard, petrol and petrol and marker is without a marker the board cannot work. Without board, marker cannot work, for example. So it's going to, if you now delete, because the two product B and C are jointly demanded, so if you decide not to produce B again, of course it's going to affect the sale of product C because they are jointly demanded. So what that simply means is that if you are no more producing B and customer usually buy the two together, that means customer will have to go to your competitor and buy. And God help you if they get to your competitor's place and then they receive better and quality service, that means they are not coming back to your company again, and the company will continue to lose revenue, and before you know it, the business may the going concern of the business may be threatened as a result. So you need to consider the impact of the closure decision on the company's turnover vis-a-vis where the affected segment is jointly demanded with the company's other products. Then number three, you also need to consider, the company will need to consider the impact of the closure decision on workers' morale, especially as it affects productivity. All right. When you, for example, this particular segment B now, all right, if a company deletes, discontinue, or close down segment B, all right, workers' morale may be affected in the sense that the workers that are operating on product A and C may become apprehensive of job loss. All right, because we are human. All right. So the workers may be thinking that, okay, if they ask our colleague to go today, what will happen to us tomorrow too? Today is our colleagues. Tomorrow may be our turn. During that moment, there will be low productivity because the morale is very low as a result of that. So you need to consider the impact of the closure decision on the workers' morale as it affects productivity. Not only that, the organization will also need to consider the impact of the closure decision on the on the um let me put it this way. Certainly before if the particular segment is going to be shut down, this will affect, okay, this may cause some kind of a negativity within the organization. So how would the company be able to manage any negativity that will arise as a result of the closure? Negativity in terms of litigation that may arise, in terms of unionism, because workers' union may rise up against the company that no, we no go agree, we no go agree. Aha. So you can imagine what that will cause to the image of the company. And that's why before the final decision is taken, in negotiation, if you want to have a successful negotiation, you have to bring all parties on board. Let them see the reason why you want to introduce that change. All right. Other than that, there will be resistance. All right. There will surely be resistance to the change that you want to introduce. All right. So I could remember some years back, around 2017 or thereabouts, one of the IOCs had issues with a particular segment of their workforce, and the issue dragged for several years. And finally, in 2018 or thereabouts, there was the court's judgment was that the company should compensate those affected workforce or staff. It was a long, protracted issues during the period whereby the company paid over 3 billion, 3 billion naira as at that time, and this is a kind of expense that they did not plan for. They did not accrue for it. The issue lasted for several years, but finally those workers won in the court, you know. But the negativity that's brought about by that singular action, it's if not because the company was international, it could have been so detrimental to the extent that those workers every day, of course, the company could not operate. The company could not operate for that period. They could not go into the office. They can't even pass through the main gate. They have to be using bridge from one place to another, working from home, going to other offices, somebody's offices the staff are just scattered almost some areas just for them to be able to conduct the business of the day. The bottom line was that during that period, in fact, all these media houses, they were there because those guys were doing some kind of a Odeshi Babalawo things, to carry sacrifice on the on the company's gates. They just want to show that we are here, you know, every morning they'll be singing songs, they'll be drumming and all of that, inviting media to come and see, all those cowries that Odeshi Babalawo will wear, all those white something something they put on their face and all of it. It was a I remember during that period, because I had the experience. I had the experience. In fact, some of us will have to be ferried through the lagoon, from Ikoyi we are ferried through the lagoon to VI to just so that those guys will not see us that we want to enter office, but it's what it is. So before the final decision is taken, we need to consider any negativities that may arise from the decision to close down the segment. Not only that, another factor that the company will need to consider is the perspective and the interpretation of the closure decision by the company's creditors. The people or the creditors that have borrowed the company money or that have given credits that have supplied materials for the production or for the manufacturing of the products. So is there any concern from those creditors in relation to the closure? Not only that, we also need to consider the impact of the closure decision or the the interpretation or the reaction of the company's shareholders. All right, you need to consider the reaction of the company's shareholders in relation to the closure decision. It may well be that it's one of the shareholders that introduced the products. All right, now you say you don't want to do again. So that means the idea of that shareholder is not welcome. All right. So that may create bad blood within the management team. All right. And then it may result to organizational politics. So you need to consider the impact of all of this. Now, those workers another factor is the company going to reassign or redeploy, okay, redeploy the affected workers. You have said that, for example, this product B or this segment B, you don't want to be producing in it again. The workers that are currently operating on product B, what will happen to them? All right. Are you going to redeploy them? If you are going to redeploy them to another product or segment, is the company going to incur any staff training costs? All right. So all of these are the issues, are the factors that the company will need to take into consideration as far as deleting of a segment is concerned. So you can just go through the material and have better understanding of all of this. So that is all about deleting of a segment. So at this point, let's have illustration. I think one of you sent me a chart earlier on. Okay, explain the point B again. Point B. Yes, I said where there is negative contribution. When there is negative contribution, that is, if relevant cost is more than the sales value from the affected segment, that will give a negative contribution. So under negative contribution, you have to advise that they should delete the segment, because if once you delete the segment, it will then increase the overall net profit of the organization. Ordinarily, negative contribution will depress net profit because it is negative. You know, it is from that contribution you are going to deduct fixed cost. So contribution is negative, fixed cost is also negative. So you can now see what will happen. So that's why we're saying once it is negative contribution, you need to delete it off. All right. So let's have illustration. Let's have illustration. Okay. Okay. Let me start with illustration number 2. It's been a while that ICAN tested the deleting of a segment. What is most the common area or the most tested area of short-term decision is special order. Special order is common. Make or buy too, yeah. But deleting of a segment has been a while. But that notwithstanding, let's see how we're going to treat it. Yes, I need one of you to read illustration number 2. Who is helping us?
Okay, can I read, sir?
Yes, go ahead, Wumi.
Okay, Ife Sinachi Limited, making a single product, has a factory in Lagos and distribute the product through 3 depots in Lagos, Benin, and Kaduna. It is estimated that during the coming year, 100,000 units will be manufactured and sold at a price of 20 naira per unit. The sales being spread as follows: Lagos, 70,000 units; Benin, 20,000 units; Kaduna, 10,000 units. Standard cost of productions are: direct materials, 4.8 naira per unit; direct wages, 3 naira per unit; factory variable overhead, 140% on direct wages; factory fixed overhead, 400,000 per annum. Sir, can you please scroll up, sir? Okay. The cost of selling and distribution incurred by the depots are estimated as follows: fixed costs: Lagos, 80,000 per annum; Benin, 50,000 per annum; Kaduna, 30,000 per annum. Variable selling expenses: Lagos 5% of sales value; Benin 8% of sales value; Kaduna 10% of sales value. From the budget for the business, okay, from the budget for the business prepared from these figures, management is considering desirability of closing the depot and selling organizations in Benin and Kaduna. If this is done, it is expected that all sales in these areas will be lost, but that sales in Lagos will remain unaffected. Required: prepare a budget for the business from the figures provided, indicating why management is thinking of closing the depot in Benin and Kaduna. B. Redraft the statement prepared above using contribution margin approach. C. Prepare a statement using the historical approach to show the net profit of the organization after closing down the 2 depots. Advise the management based on the income statement prepared above.
Thank you. Yes, that is the question. That is the question. Examiner is asking you to prepare a budget for the business from the figures provided and also indicate why management is thinking of closing the depot in Benin and Kaduna. So from this requirement, you can see that this relates to um, deleting of a segment because the company is thinking of closing down the depot in Benin and then Kaduna. So what are you supposed to do to answer this question? You can see examiner did not give to you an income statement that will indicate profit or loss. All right. And that's what examiner is asking you in the A requirement to prepare a budget statement. Budget statement is the same thing as income statement. Examiner can call it anything. All right. So you want to prepare operating statements, okay, to show the profit or loss for all the depots. All right. So that's what we need to do. So in this case, let me stop sharing this and move to the working notes. Okay, that's illustration number 2, page 32. Solution to illustration 2, page 32. All right. So examiner is asking you to prepare budget statements and then indicate why management is thinking of closing down. So in my explanation, when we were discussing the concept, I said that the only reason that we make management of contemplating of deleting a segment is if that segment is operating at a loss. All right. So the income statement should, of course, will show you profit or loss for each of the depot in this instance. So we want to prepare income statements. Examiner did not call it income statements, it was called budget statement. So the name of the company is Ife Sinachi. Okay. Number A, budget statement. Okay. So this one has nothing to do with Benin and Kaduna. So because from the requirements, examiner only asks you, you are only asked to prepare a budget for the business from the figures provided indicating why management is thinking of closing depots in Benin and Kaduna. So you are going to prepare you have to prepare budget statement for the business. It's not just about the affected segment, it's for all the segments. So that will show you why management is thinking of closing it down. So in this case, I will create 4 columns, one for Lagos, one for Benin, one for Kaduna, and one for the company as a whole. So here will be for Lagos, followed by Benin, Kaduna, then total for the company as a whole. My pen has been malfunctioning since yesterday. It's not writing well. So our figures are in thousands. Now, examiner has told you that the company will produce 100,000 units. All right, you are told that it is estimated that during the coming year, 100,000 units will be manufactured and sold at a price of 20 naira per unit. The sales being spread as follows. So out of 100,000 units, 70 is for Lagos. All right, let's put it there, units. 70,000 is for Lagos, 20,000 for Benin, 10,000 for Kaduna, 100,000 for the company as a whole. All right. Let me remove the naira I've put on the top. Let's put it there. Okay. So if that is the case, the first item from the format, we want to prepare the income statement. So I need to start from the sales value. I will then go back to the question, what's the selling price per unit? According to the question, selling price per unit is 20 naira. Therefore, 70 multiplied by 20 will give us 1,400. 20 multiplied by 20 will give us 400,000. 20 multiplied by 10 will give us 200,000. All right, so when you add up everything, or 20 multiplied by 100, this will give us 2,000. That's the sales value. So I need to compare this sales value with the underlying relevant cost. So I would then say relevant cost. All those categories you usually do under operating statements when you are using marginal costing technique, it's not needed here. Just get your sales value, less your relevant cost to get your contribution, then you less your period cost to get your profit. That's it. All right. So relevant cost. Under the relevant cost, I will go back to the question if I'm given direct material. How much is direct material per unit? 4 naira 80 kobo is direct material. So here is direct material at 4 naira 80 kobo. I also have direct wages. Direct wages is 3 naira. Okay. So here is direct wages. DW at 3 naira. Then we also have, there's no direct expenses, but we have factory variable overhead. Factory variable overhead at 140% of direct wages. Okay. Factory variable overhead is 140% of direct wages. Not only that, we also have selling expenses. Remember, we are determining relevant costs. So both variable and selling expenses are relevant because if you don't incur the selling expenses, you will not be able to make sales. Therefore, selling expenses are relevant costs. So I will then come here, selling expenses. According to the question, you are told that the cost of selling and distribution incurred by the depot are as estimated below. So the fixed selling expenses is 80,000. Variable selling expenses is in percentage. Let's consider variable first. So I will then go and do my workings. So before that, let me just put it down. Variable selling expenses. Then we also have fixed selling expenses. All right. So let's first of all multiply this. 4.8 multiplied by 70. What do you have? Give it to me.
336.
336.
336. Here is 336. Okay. 3 multiplied by 70. That's 210, right?
Okay.
Then 1.4, 140% of direct wages. That is 1.4 of 210. 1.4 multiplied by 210. What do you have?
That's 294.
294. So variable selling expenses. So we need to go and work it out. All right. But before we do that, let's complete the other part. 4.8 multiplied by 20. That should be 96, right?
96.
Okay. 4.8 multiplied by 10 will give us 48. 4.8 multiplied by 100 will give us
480.
480. 3 naira multiplied by 20 will give us 60.
60.
3 naira multiplied by 10 will give us 30.
That's 30.
3 naira multiplied by 100 will give us 300. Okay? Then factory variable overhead at 140% of direct wages. 1.4 multiplied by 60.
84.
54. Okay, 84.
84. 84.
Okay. 1.4 multiplied by 30.
42.
42. 1.4 multiplied by 300.
420.
420. Okay, so let's go and determine variable selling expenses. So according to the question, you are told that variable selling expenses, Lagos is 5% of sales value, Benin 8%, Kaduna 10% of sales value. So let's go and do working for that. So without going too far, let's do our working for here, or we just leave this space. This is for the first table, first requirement, second requirement, then third requirement. Go and do your working here. Working number 1. I want to determine variable selling expenses. Okay, variable selling expenses for Lagos. We are told that Lagos is 5% of sales value. Sales value in Lagos is 1,400. Then for Benin, 8% of sales value of 400. Kaduna is 10% of sales value of 200. Okay, so here is 20, here is 32. Then 5% of
70.
1,400.
70.
Pardon?
70, sir.
70. So when you add up everything, that will give us 122. This is total variable selling expenses. Total variable selling expenses. All right, so that's that. So let's go and post. Variable selling expenses, working number 1. Lagos is 70,000. Benin is 32. Kaduna is 20. When you add it up, total is 122. Then fixed selling expenses, according to the question, you are given 80,000 for Lagos, 50,000 for Benin, and 30,000 for Kaduna. So 80, 50, 30. Here is 80, 50, then 30. When you add it up, that's 160. Let's go back to the question in case we have other relevant costs. So let's check. It is possible you may have something like opportunity cost, specific or attributable fixed cost. Any other relevant cost that you have in the question, you have to consider it. All right. But in this case, we don't have any other relevant costs. So if that is the case, let's close it down. Let's close it down. You know, you have a figure in the table. which is factory fixed overhead of 400,000 naira. Factory fixed overhead is not a relevant cost. It's not relevant. But when you want to determine profit, in this question, the examiner says you should prepare budget statements. So you want to prepare a statement that will show profit or loss. Therefore, you must consider fixed cost. You deduct fixed cost from your contribution to give you profit or loss. All right, but fixed cost is not fixed overhead is not a relevant cost. Let's move on. So at this point, let's add everything together. Let's give me the final answer here under each one. All right. Yeah, pick it one by one. This will give us contribution. What do you have?
990 for Lagos.
990 for Lagos. Yes. Is it only Femi that is there?
322 for Benin.
Benin 322. Okay. Let me try the total.
170 for Kaduna.
Kaduna 170. All right. Oh, did you not minus from the sales value?
No,
You
I've
need
not
to
managed
less.
this one.
Oh, okay. You need to
Okay.
minus. So this 990 minus 1,400 will give us 410.
410. 410.
Here will be 410. This one will be 78. Here will be 78. What's wrong with you? Here is 78. Then this one that is 170 will give us 30. So when you add it up, 108, that's 518. So contribution is 518.
518.
Okay. All right. So after this, you need to less the period curve, fixed production overhead, factory fixed overhead. So I would then call me a factory fixed overhead. Examiner has given a factory fixed overhead of 400,000,
400,000.
sorry, 1.4. Is it 1.4 or 400,000?
400,000.
So
400,000.
400,000 per annum. So that 400,000, you are going to split it. You are going to distribute it among the depots. So let's go and do working for that. So that we want to know which profits, how much profit is attributable to each depot. So factory fixed overhead. Okay. The total factory fixed overhead is 400,000. Okay. Total factory fixed overhead, 400,000. So you want to apportion the 400,000 among the three depots. On what basis are you going to apportion the fixed overhead? Of course, to apportion the fixed overhead, you are expected to look for something that unified all the depot, that is something that is common to all the depots. When you look at the question, examiner was specific by telling you that during the coming year, 100,000 units will be manufactured and sold. So if that is the case, and you are now given the basis of sharing the 100,000s, so that's the basis you are going to use to share this fixed overhead. That is, you use the sales units. All right. Therefore, you can then say distribution. You want to apportion it. Okay. Lagos. Lagos will be equal to Lagos will produce and sold 70,000 units divided by the total 100,000 units, then multiply by 400,000. So
That's
this will give
280.
us
280.
280. Then for Benin we produced and sold, and we produced 20,000 out of 100,000. We multiply with total 400,000 fixed costs. This will give us
80,000.
80,000. Then Kaduna will produce 10,000 units out of 100,000. So that will be 40. So whatever you have shared must be equal to the total, which is 400. Therefore, let's go and post it. Let me write this clearly. So 280, 80, then 40. Fixed overhead. Working number 2. So 280, 80, then 40. The total fixed overhead is 400. So this will then give us the profits. Here will be net profits or loss. So for Lagos, 410 minus 30 will give us 130.
130.
78 minus 80 will give us minus 2.
No.
30 minus 40 will give us minus 10.
10.
So 518 minus 400 will give us 118. So that answers requirement number A. In the requirement number A, examiner wants you to calculate how to prepare budget statements, indicating why management is thinking of closing down Benin and Kaduna. You will see that Benin and Kaduna, Benin has a loss of 2,000 naira. Kaduna generated loss of 10,000. That's why management is thinking of closing down Benin and Kaduna. Okay. The number B part of the question. Yeah, you are to redraft the statement prepared above using contribution margin approach. And you recall that when you are using contribution margin approach, each of the segments, you are going to stop at contribution margin, either positive or negative contribution. But in this particular question, because examiner has already incurred fixed overhead of 400,000, so that 400,000 overhead will not be apportioned to each of the products. So it will go to the company as a whole. So it will be under total. All right. So when you are using contribution margin approach, you are supposed to stop at contribution margin for each product or segment. In this case, for each depot. All right. So let's see how it will look like. Let's go to the second page. Number B. We want to prepare our contribution margin statements. Okay. If I were to be in physical class, this would have been very interesting. I will just rub off the lower parts. Then I will, because just all you need to do now is to repeat what we have done before. But in any case, let me quickly write it out.
Can't you
So
copy and paste?
you're on your own. Yeah, you're on your own. I can't copy and paste anything here, you know. So Lagos, Benin, Kaduna, and then total. All those opportunities that lecturer usually have in the class, we don't have it online. You have to write. The reverse is the case here. In the class now, lecturer will be bombarding you with notes. You'll be the one that will be writing. Your hand will be paining you. But here, online, it's the lecturer that will be writing. So then we just pay attention, doing nothing. Just listen.
And print it out later.
Yeah, well, but
At least,
who
So
is
we
suffering
don't
it?
like people writing when you're
let's say we
teaching.
are doing nothing, sir.
I'm just saying, I'm not saying you are not, of course you should do so. Some of you are jotting down something or you are writing note, but what I'm saying is, when you are in the physical class, in the classrooms, lecturers don't write notes, no be so. It just download to you. Okay, we give you notes. All right. You'll be the one that will be writing. You don't expect lecturer to be writing on the board, except you have done calculation on the board. But when you are given notes, you are the one that will write it. But here, I'm the one writing for you. That's what I'm saying. In any case, let's move on. All right. Yes. For the sales for Lagos is 1.4. Benin still remain 400, 200 for Kaduna, 2,000 for the company as a whole. Then you less the relevant costs. Remember, we are using contribution margin statements. Okay, so you have direct material. How much is direct material for Lagos again, sir? 336. Please, if you have it at your hand, you can be calling it for me so that it will be faster. 336. I don't need to be switching pages. 210.
96,000.
96,
96 after 96,
96.
48, 48.
48. Then total
Total 480. 480.
480. Okay. Then I have direct wages for
210
Lagos. 210.
for Lagos.
60.
60 for
60.
Benin. Then 30.
30 for
30 for
Kaduna.
Kaduna.
That's 300 total. Then after direct wages, we also
300
have
total.
factory,
Mhm.
variable overhead.
Factory
Okay.
variable overhead.
294.
140.
294.
The
84.
290,
84.
294,
42.
84,
42.
420.
420.
42,
And
420.
we have selling expenses. Variable selling expenses.
Variable
I know this
You have 70.
70,
32.
32,
20.
70,
that's
122.
122.
122.
We also have fixed
Fees selling expenses.
expenses.
80.
80,
50.
50,
50,
30.
30. That's
30,
160.
160.
So that's all. So all we need to do now, we now add everything. We find the net. So this will give us contribution. So this contribution margin is what the examiner wants you to use. Let me write that. Contribution. So contribution for Lagos is 410.
410. 78.
For 78, then
30.
30. That's
518.
518. So this is where you are going, because the examiner asks you to use contribution margin statement. So this is where you are going to stop for each of the, this is 78, for each of the segments. However, the company has already incurred fixed overhead of 400,000. So the entire fixed overhead will be taken to the company as a whole. So I can come here factory fixed overhead. 400,000, give it to the company as a whole. So the net profit still remain as 118,000. So that's what the examiner wants you to do, all right? So when you are using contribution margin statements, of course, you are supposed to stop at contribution. If not because there's a need for you to determine profit there, so you should have stopped. We would have stopped at contribution margin. No need to do fixed overhead at all. But here, the examiner wants you to just determine the profit. So that's it. So which is consistent with what we have done before. The only difference is just the fact that you are not sharing the fixed overhead among the depots. All right. So that's just the difference from this and what we did in A. Now, for the C part of the question, you are to prepare a statement using the historical approach to show the net profit of the organization after closing down the two depots. So if the company closed down Benin and Kaduna, what will be the effects on the net profits? So that's what the examiner is asking you here. Let's quickly do that. Okay. Let me use here. Number C, historical state. There's not a whether it is historical statement, income statement, budget statement, operating statement is the same thing. Historical, but you just have to use what the examiner has used for you. Historical statement. Examiner is saying that after closing down of Benin and Kaduna depots, okay? After closing down the two depots. So I would then say historical statement. I can say, when you close down Benin and Kaduna depots, that means only Lagos depot will subsist, right? So in this case, I can say historical statement for Lagos, or I can say historical statement after closing down Benin and Kaduna. All right. So whichever one, we are still saying the same thing. After closing down of Benin and Kaduna depots. Okay. So in this case, now that we have closed down Benin and Kaduna depots, you only calculate for Lagos. So sales value for Lagos is 1,400. That will be on the credit side. Less the relevant cost. Don't go and be looking for shortcuts. That will affect your mark. Because a student can say that Shebi, I've calculated relevant cost for Lagos before. It was a 410. Let me just less 410. So what about the line item that the examiner is expecting you to do? All right. So it's not all the time that you'll be looking for shortcuts. So here will be direct material. Direct material for Lagos, 336.
336.
Direct labor, direct wages,
210.
210. Then we have factory variable overhead, which is 294. Then we also have variable selling expenses,
70.
70. We have fixed selling expenses,
80.
80. So you had everything together. We got
14.
990.
Okay. Yes.
990 minus, that will give us 410.
14.
This 410 represent contribution. That's contribution margin. Recall that the company has already incurred 400,000 fixed overhead. So the implication is that since you have closed down Benin and Kaduna depots, the entire 400,000 naira fixed overhead will be borne by Lagos because the company cannot, the other products, other depots cannot absorb that again. So only Lagos will bear the entire 400,000 since it's only Lagos that the company operates. So I will then come here, factory fixed overhead, 400,000. So 400,000 minus 410 will give us 10. So this net profits after closing down of Benin and Kaduna depot. Yes, Femi, you raise and talk to me.
Okay, sir. I wanted to know why, since the factory production capacity is 100,000,
Yes.
and we have closed the other states are they distribute those 100,000 to them. Now, and the question did not tell us that because they have stopped production distributing the product to Benin and Kaduna. Did not say they reduce. They did not tell us that the production was reduced. Now I was thinking that we'll still use the 100,000 since it's only Lagos now. Then we will now use
No, you
100,000
can't.
for direct
You can't
material.
do. No, you can't
Okay.
do that. So examiner has told in the question that 100,000 units will be manufactured and sold. You cannot take the sales of Lagos. The fact that you have closed down Benin and Kaduna, can you take the sales you're supposed to earn in Benin and Kaduna and bring it down to Lagos? It's not possible now. Shay?
Okay.
The sales that the company would have earned in Benin and Kaduna, those sales cannot be brought to Lagos. So you are not producing 100,000 in Lagos. So it still remain 70,000 for Lagos. Yeah.
Okay. So the company will just produce 70,000 units now.
Yeah.
And the direct
That's
wages will not change.
that's
The
the
direct
if
material will
exam.
not change.
Yeah. So of course those ones are always constant. So except that at times the examiner can tell you that okay, after closing down Benin and Kaduna depots, it's assumed that Lagos State will produce 100,000 units, the entire 100,000. So if that is the case, then of course you are supposed to take the entire 100,000 units to Lagos, but examiner did not tell you otherwise. All right. So yeah. That's the implication. Now, the last part of the question, you are now told that you are to advise the management based on the income statement prepared above. So we have prepared three different income statements. The first one in the A part, we use budget statements, and then the total profit for this organization was 118,000. In the B part of the question, we calculate contribution margin statement. We prepare contribution margin statement. The profit still remain at 118,000. Then number C, we use historical statement after closing down Benin and Kaduna depots, and the profit has reduced to 10,000. So examiner is now asking you to advise. All right, you should advise the management based on the income statement prepared above. This is where you have responsibility. You have carried out the economic and financial viability of Benin and Kaduna depots. So what should be your advice? Should the company close down Benin and Kaduna depots? I'm putting it to you.
No,
Yes?
no, no, no,
No,
no.
no, 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 it's not. No,
Why?
because when you close, because of the profit margin.
Because of the profit margin, profit has reduced.
That's
Okay.
not the only reason.
Because we have positive contribution.
Okay.
The
Okay.
contributions of the Bini and the Kaduna are contributing towards the recovery of the general overhead as well.
Yeah. We have a decision rule in relation to deleting of a segment. The rule says that if positive contribution, do not delete. So because the two depots has a positive contribution of 78,000 and then 30,000 naira, of course, our advice should be that they should not delete it. That's our main focus. You are using contribution margin, all right, to advise. So I will then come here. Let's advise.
Decision.
Okay, so I will then say currently, or the current, okay, let's put it as that. Currently, the total net profits for Ife Sinachi Limited is 118,000 naira. Is 118,000 naira. If Bini and Kaduna depots are closed down, the profits, the net profits will drop to, or will fall to, the net profit will fall to 10,000 naira. Therefore, the company should not, close down Bini and Kaduna depots. This is because the decline in profits, the reduction in profits of 108,000, from 118 to 10,000. So there's a fall in profits of 108,000. That is 118 minus 10,000. All right. This is because the reduction in profits of 110,000 naira arising from the closure so we have advised that the company should not close down. Therefore, the company should not close down. This is because the reduction in profit of 108,000 is the contribution. Let me put it this way. Is the positive contribution of Benin and Kaduna towards the recovery of the company general fixed overhead. Is a positive contribution of Benin and Kaduna towards the recovery of the company's general fixed overhead. Okay. Now, when you look at the contribution of Benin and Kaduna depots, contribution of Benin is 78,000 naira. Contribution of Kaduna is 30,000. When you add it together, that will give you the 108, which represent the fall in the profits. Okay, so this technically means that the reduction in profits is as a result of, is a contribution, is a positive contribution of Benin and Kaduna depots towards the recovery of the company general fixed overhead and then net profits. Okay, and net profits. So that is that. We've already advised that the company should not close down Benin and Kaduna Depot. So that's end of the question. Okay, that's end of the question. Yes, let's have one more before we close the class. Yes, David, go ahead.
Good evening, sir.
Good evening.
Please, can you help explain why this contribution margin is different from the one we have learned before? No, because originally contribution is just sales minus variable cost. Well, in this part we're adding a fixed cost to it. What's the difference and why is it like this?
It's not just fixed cost, it's relevant fixed cost. So it's not
Okay,
in
does it
all
mean
cases that contribution is variable, is selling price minus variable cost. Not in all cases. Here we are talking about relevant costs. All right. So sales minus relevant cost will also give you contribution. Okay, David, depending on the perspective, depending on what you want to use it for. So in this particular instance, it's not just about direct costs. So under short-term decisions, particularly under short-term decisions, contribution may be sales minus variable cost. All right, maybe sales minus variable cost or sales minus relevant cost. Okay, the only thing you cannot say contribution is the fixed cost. So when you say fixed cost, it's not just about fixed cost, it's fixed selling expenses. All right, it's not just fixed cost. Because these fixed selling expenses, if you don't incur it, the company will not be able to make sales. That's interpretation. So every other
Yes,
thing
sir.
you have on.
Sorry, but even the fixed selling expenses, we don't deduct it from the original contribution. Like it's not part of the variable cost that we used to derive contribution
Fixed
before.
selling expense, hold on. Fixed selling expenses is not a variable cost. Even as the name implied, it's not a variable cost. In this instance, it's just relevant cost. It's not variable cost. Fixed selling expense is not a variable cost. It's a relevant cost. So the reason why here, look at the title. After sales, what do you have? You have relevant costs. So what we are determining is relevant cost, not variable cost. Relevant cost is the same. Relevant cost could be variable, could be fixed. All right. So I understand you're concerned, but as far as short-term decision is concerned, our focus is on sales and relevant cost, not only variable cost. So in other aspects of a performance plan, say for example, under CVP analysis or you want to determine normal contribution, it's understandable. Sales minus variable cost. You get your contribution, isn't it? That's your concern. But you are
Yes, sir.
wondering, why did you include fixed selling expenses? Of course, as part of a relevant fixed selling expenses is a relevant cost. Why? Because if the company does not incur the fixed selling expenses, you will not be able to make the sales. That's interpretation. All right. So
Okay, sir.
under short-term decisions, you remember, I told you earlier that we are applying the concept of marginal costing technique and the principle of relevant costing. All right. So our focus is on relevant costs, not necessarily only variable costs. But the only thing you cannot consider as relevant cost is fixed overhead. Fixed overhead is not relevant. And that's why we deducted it from the contribution to get the profit. So I understand your concern, David. All right. Okay. So let's have one more illustration on this. Let's see. We have, let me stop sharing this.
Hello, sir.
Yes, talk to me.
I'm sorry, sir. Does it mean that not only under this short-term decision, maybe other subsequent, where if we are being asked to identify the relevant cost in other topics and there is fixed selling, then we should equally consider it as a relevant cost.
I just mentioned it. Anything when you are determining relevant cost, fix any selling expenses is relevant. Any selling expenses is relevant because if you don't incur the selling expenses, you'll not be able to make sales now. Not be so. Say, for example, if you are employed as a marketing executive, part of your part of your compensation will be variable, while others will be fixed. So variable in the sense that the company may tell you that, okay, if you are able to sell so much quantity, you are going to earn a commission of 5%. So that means the higher the sales you are able to generate, the more the contribution that you are going to earn. But the fixed part of your compensation will be the salary that you are going to earn for making the sales. Do you get? So the bottom line is that if the company does not pay you that salary that you are going to earn, the fixed amount, will you make the sales? It will not happen. So because sales is very important within an organization, especially for manufacturing company. So if the company does, what we are saying here is that if the company does not make that, does not incur those selling expenses, whether variable or fixed, the company will not be able to make the sales or the sales will be low. All right. So any selling expenses is a relevant cost. It's different from being variable. Like I said, we have variable selling expenses. You also have fixed selling expenses. But when you are talking about direct costs, those costs that are directly the company will incur in production, those are direct costs. Those are the prime costs. So it's different from variable selling expenses. Some of this I think I explained to you when we had the operating statements. All right. So again, bottom line is that once you see selling expenses, be it variable or fixed, they are relevant. They are relevant. Okay. Yes. Let's have one more before we close the class for today. Let's solve this illustration number 1. I will give you illustration number 3 as an assignment. Please go and solve illustration number 3 as an assignment, and you have to submit Today is Tuesday. So you have to submit latest Friday. Yes, you have up to Friday to submit this assignment. All right? Good. So let's have one more illustration to close the class. Let me see. Um, let me see. Who will read for us?
Okay, I'll just read.
Okay, thank you. Go ahead.
Adigboluja Limited produces 3 brands of tire, including Michelin, Dunlop, and
No.
Pirelli.
Okay, use the one that you have on
Okay,
the
oh,
screen.
okay, sorry. Adigboluja manufactures 3 brands of ice cream: chocolate, vanilla, and strawberry. The present net annual income from this is sales, variable cost, contribution, fixed cost, and profit or loss. The company is concerned about its poor profit performance and is considering whether or not to cease selling vanilla. It is felt that selling prices cannot be raised or reduced without adversely affecting income. 5,000 naira of the fixed cost of vanilla are direct fixed costs, which would be saved if production ceased. All other fixed costs would remain the same. Required: should the company drop the sales of vanilla? B. Suppose, however, it is possible to use the resources realized by stopping production of vanilla and switch to producing a new ice cream, in bracket banana, which would sell or 50,000 and
Which you
incur
said for.
which will sell for 50,000 naira and incur variable cost of 30,000 naira and extra direct fixed cost of 60,000 naira. Will your earlier decisions in A above remain the same? C. What are the non-quantifiable factors that the management of Adigboluja should consider?
Thank you. Yes,
Yeah.
in the A part of the question, you are to advise whether the company should drop the sale of vanilla. So from the indication, from these requirements, examiner mentioned that you should advise whether the company should drop the sale of vanilla. So something should call your mind that this question relates to deleting of a segment. All right. You can see that, of course, this particular question is more direct because the income statement have been given to you, and you can see that vanilla generated loss of 3,000. All right, there's a loss of 3,000 attributable to vanilla, and that's why the management is thinking of closing down vanilla. Therefore, what are you supposed to do? Very simple. In this case, because examiner is asking you to advise whether they should drop the sale of vanilla, you are less concerned with chocolate and the strawberry. So your focus will be on the vanilla by comparing the sales value from vanilla versus relevant cost of producing vanilla, whether it will result in a positive or negative contribution to Adigboluja Limited. So if that is the case, let me stop sharing this and move to the working note quickly. Okay. All right. Solution. Oh, please. Let me see. Okay. So, solution to illustration 1. I think it's still on page 30, 32. So the name of the company is Adigboluja. Okay. So number A requirements, you have to advise whether the company should drop the sale of vanilla. So what are you supposed to do? The most important thing to do is to prepare contribution margin statements for the affected segments. In this case, is vanilla, whether it will result in a positive or negative contribution to the company. So I can say, I can call it either income statement or contribution margin statements. Contribution margin statements for vanilla. Okay. So all you need to do is to compare the sales value of vanilla. The sales of vanilla is 40,000 naira. The sales of vanilla is 40,000 naira. You compare that with relevant costs of making vanilla. Relevant costs. According to the question, we have variable costs of 25,000 naira. Variable costs associated with vanilla is 25,000 naira. Then we go back to the question. We identify other relevant costs. So fixed cost is not a relevant cost. It's not relevant. In the first paragraph, in the second paragraph, in the first paragraph after the table, you are told that the company is concerned about its poor profit performance and is considering whether or not to cease selling vanilla. It is felt that selling prices cannot be raised or reduced without adversely affecting income. 5,000 of the fixed cost of vanilla are direct fixed costs, which will be saved if production ceased. All other fixed costs will remain the same. So what the examiner is saying here is that out of the 18,000 naira fixed costs associated with vanilla, 5,000 of it is a direct fixed cost. Direct fixed cost is a relevant cost. So I will then come here, direct fixed cost, 5,000. There is no other cost again that is relevant, so you add it up. That's 30. 30 minus 40 will give us 10,000. This represents contribution margin. So examiner is now asking you to advise whether they should drop the sales of vanilla. Based on our discussion earlier, if positive contribution, do not delete the segment because the segment is contributing positively towards the recovery of the company general fixed overhead and then net profit. So we need to advise. Adigboluja should not drop the sales of vanilla because It is contributing because it is contributing positively towards the recovery of the company general fixed overhead and net profits. Okay, so we have advised that the company should not drop the sale of vanilla because it generates positive contribution. So that's that. Number B part of the question. Suppose, however, it is possible to use the resources realized by stopping production of vanilla and switch to producing a new ice cream banana, which would set for 50,000 naira and incur variable cost of 30,000 naira and extra direct fiscal of 6,000 naira. Will your earlier decision in A above remain the same? All right. If you drop the sale of, if you introduce a new product called
Banana.
banana, in this case, you need to prepare your income statement for banana. Then you now compare with the compare the contribution margin of the two. Anyone that has a higher contribution is the one you are going to advise upon. So number B, let me see if that will be sufficient. 1, 2, 3, 4, 5, 6, 7. Let me see. 1, 2, 3, 4, 5, 6, 7. Okay, let's manage it. Number B, contribution margin. Contribution margin for banana. Okay. So the sales of banana, according to the question we are told, is 50,000 naira. All right. And variable cost is 30,000. Direct fixed cost is 6,000. So here is 50,000 less relevant costs under the relevant costs. We have variable costs of 30,000. Direct fixed costs is 6,000. When you add it up, that's 36,000. Minus 50,000 will give us 14,000 contribution. So examiner is now asking you, if the company switch resources from producing vanilla to producing banana, will the earlier decision still remain the same? Of course. The contribution under vanilla is 10,000. Contribution margin for banana is 14,000. So what should be our advice?
They should drop it though. They should drop vanilla and go for banana.
You should
Okay.
delete the segment of vanilla and pick banana because you
Okay,
have a higher contribution margin
it's okay. So we then say,
of 14,000.
correct. So we then say, Adigboluja should switch the resources. Let me write that. The resources of producing banana to producing resources of producing vanilla to producing banana. Banana. Okay. Since they, or in order to earn, let me reframe it. In order to earn additional profits, in order to earn additional profits or contribution of 4,000 naira. That is 14,000 minus 10,000. Okay. So we have made our point that the company should switch to earn additional profits. So that's that. Now, number C part of the question. Examiner is asking you, what are the non-quantifiable factors that the management of Adigboduja should consider? Okay. Number C, non-quantifiable factors. Okay. Now, like I explained to you earlier today, I said that whenever you are stating your qualitative factors, you have to link it with a question. It's important that you link it with a question. Don't make it too generic. All right, you have to link it. How for you to be able to hang your reasonable mark on this. Now, we want to state our assumptions. Sorry, qualitative factors. What are those qualitative? Now, what's even our final decision? We have made a decision that the company should drop the sale of vanilla and switch resources to producing banana. So that means the company Adigboduja will not produce vanilla again. So only banana will subsist going forward. So if the company stop the sale of vanilla, what will happen? What are the factors that we need to consider? All right. So let me start with one. Then you give me the remaining one. Number one, Adigboduja Limited should consider the effects of closing down or the effect of dropping the sales of vanilla on the company's reputation or image, on the company's reputation. Okay. Because this can affect the image of the company. If you are not selling vanilla again, the customer that are already used to vanilla, of course, they are going to tell their friends, their neighbors that don't mind that company. They have stopped selling vanilla. They don't even know what they are doing. I'm not sure the management is serious with the business. How would they stop vanilla? that I love so much, you know. So the company must
Taste, abi?
consider, pardon?
Some of your own taste, they should not even close it down.
I know, you know, everybody is selfish now, so I have to
Not is
consider
sweaty.
that's what affects me. That's what affects me because I love vanilla. Now that you are no more producing vanilla, I won't take it seriously. So I have to go on social media. Don't mind that company, they are not serious. I went to their company and I was told I wanted to buy ice cream for myself and my friends and whatever. And on getting there, we discovered that they are no more selling vanilla. That company is not serious. It's not going to end with me. Others that see that, whoever that sees that comment, we also work on it. Oh, it's true. They are no more selling, you know. So, information, the way it will go viral, before you know it, the image of the company is at risk. So you have to do some level of damage control. So, yeah, as you can see now, I mentioned the name of the company. All right. I also mentioned the product, the affected segments. So that's what I was saying the other time, that don't make it too generic. Don't just say the company should consider the impact of the impact of the closure decision on his reputation. No, don't make it too generic. All right. So just link it with the question somehow. Then number two, so I'm asking you, what should be the second qualitative factor we should consider? Yes. Yes, Abdulateef, go ahead.
I will advise that the company should equally look into the impact of the capital to invest in the production of banana. Would they be able to recover the capital? Maybe the number of years it will take them, if possible. So that is a factor that they consider.
The
Not just the
capital,
profit, not just the profit they will realize.
okay. So what the company is saying is that they want to switch resources. What they normally use to produce vanilla, they want to switch their resources to producing banana. So the issue of capital may not arise to a large extent.
Okay, can I say it like this?
Yeah, go ahead.
Switched, right? It may be that not the same machinery and other items that they use in vanilla that they will be used equally in the production of banana.
Okay,
So
so
the new,
what you can say in because of the to incorporate your points, what you can say is that will switching resources um to producing banana result in additional equipment being bought, you know.
yes,
So you can introduce that, because if you say you want to switch to banana, that may be that there will be some kind of machinery or equipment or tools that needs to be that is special to, that is unique to making banana. All right. So if the company will incur that, then you need to consider that factor as well. Okay. So you have your points. Okay. Let's put it this way. We're um switching resources. We're switching to banana required additional equipment required additional equipment. Okay, if it will require additional equipment, does the company have the capacity to purchase, the financial capacity to purchase the equipment? Is another factor. All right, but let's leave it at that. Then number three, what about the taste and preference of the customer? Okay, customer taste and preference. What do you talk? What do you say as per that? You know, there are some, like we said the other time, that I won't take it lightly with the comp because I love vanilla. We're talking about ice cream here. Some people they cannot do without without vanilla. Now that you say you are no more producing vanilla, then because my taste is vanilla, and even some people like vanilla. Like for me personally, when I used to lick ice cream, I do mix ice cream, I mean vanilla with strawberry, you know. So if you are no more producing vanilla, that means I will not buy strawberry from you as ice cream seller, all right? Because I like the two combined together. So customer taste and preference should also be considered. Let's put it this that way. The company, I'm coming to you, Elozo. The company should consider should consider the customers' tastes and preference before before dropping the sales of vanilla. Okay. Number 4. Yes, Elozo, you are the first to raise hand before Abdulateef. Do you still have your points? Elozo,
Yes, sir.
talk
You
to
know,
me.
yes, sir. Introducing this new flavor, banana, can also as well lead to training of new staff.
Yes, you have a valid point. All right. So we need to ask the question, would the introduction of banana ice cream results in training and retraining costs for the organization? Because, of course, the new ice cream, you have to teach the staff, you have to teach the workers how they are going to do the mix of the material used in producing banana. All right. So with the company, the expert that will teach them, that will teach the workers, is the company going to incur any additional cost as a result of that? So we need to factor, it's part of the things that we need to consider. Okay. Then number 5. Yes, Abdulateef, go ahead.
Thank you, sir. I think another factor that they have to consider is the source of the material for the production. Would they be able to have a reliable, very consistent supply or the
Yeah,
resources? There
you are
won't be
correct.
any.
Yeah. Would that be a reliable supplier? Okay. Would there be a reliable supplier of bananas inputs? Reliable suppliers of banana ice cream inputs or material. Okay. Would there be, no, not would there be. Do we have, let's put it that way. Do we have a reliable supplier of banana ice cream material or inputs? Okay, it's a question we need to ask. All right. Yes, Omawumi, go ahead.
Okay, what about cost of advertisement for marketing the new products and like
Yes,
securing a market share for the product as well?
yes. It's a new product now. We are just introducing banana, so we need to do the marketing to increase sales. Okay? Do we have the capacity? All right. Do we have the financial capacity to absorb the additional costs that will be incurred in marketing and promotion of the banana ice cream? It's a valid point. You can see you have to just think outside the box. All those factors that you think is necessary uh to produce banana. Okay. So you can see most of the things that we have in these factors, it's only maybe two of them relate to the ones I mentioned earlier today. The interpretation and the perspective of the company's creditor, the reaction of the company's shareholders, how the closure decision will impact the company's turnover, especially where, in this case, the vanilla and other ice cream are jointly demanded. These are the things. Okay, you also need to consider so many things you have to you consider in this instance. All right. So, Wumi, you have a point. We need to consider if you have the financial capacity to absorb the additional marketing costs that will be incurred in promoting the new ice cream. Yeah, is a valid point. So let's limit to 5. So whichever one you have, everybody can just add it on the spot. But the bottom line is that when you are stating your assumption, sorry, when you are stating your qualitative factors, don't make it generic. You have to link it with the question, relate it with the question. Don't make it too open. All right. So that is that. That is that. So yes, this is where we are going to call it a day. In our next class, by the grace of God, we are going to have make or buy decision. We are going to make or buy decision. Remember, you have an assignment to submit not later than Friday 8th of, oh, Friday will not be appropriate because on Friday we have a program for you by 8:30. And no, okay, let's do it this way. You have to submit not later than Sunday. All right, not later than Sunday. So I will use Monday to mark your scripts. I'll use Monday and Sunday to mark your script. Yes, David, go
So
ahead.
read the page again.
Yes, let me stop sharing this and move to the, so that you see it's illustration number 3, page 33. Okay, cash and pick limited, page 33. Illustration number 3. Yes, David, go ahead.
Yes,
Thank you,
sir.
sir.
Please, this short-term decision and then relevant cost of land, is it only applicable to manufacturing firm? And how practicable is it in this era that we're learning prime costs, relevant costs, especially on manufacturing sector?
How relevant is short-term decision? Every organization make a decision, all right? It's not only a manufacturing company that makes decision. Any companies or anything that has to do with decision making, you need the knowledge of a short-term decisions. I just mentioned now. Say for example, you have as a service company, for example, you have a location in Lagos. You also have another one in Port Harcourt. You have another location, a branch in Kano. So If one of those locations, one of those your branches are not profitable, you can decide to close it down. Is that not a decision? It is, you know. So not only that, under this short-term decision, you are going to learn about make or buy decision. Make or buy is not only attributable to manufacturing company alone. In fact, it's more apparent now in practice. Gone were those days whereby management will just be spending time to be discussed, to be recruiting people. That okay, we have an opening, that then we now send out advertisement for vacancy that people should submit application and all of that. The management team and them go put themselves in a meeting or in a particular room and then be interviewing people. Most of these things have been outsourced to a third party, to consultant to do it on their behalf. So the decision to outsource our recruitment activities is also it's a short-term decision. All right. So if you have a special order, for example, now, all right. So a client, I don't want to relate it to a manufacturing company, a client is, I mean, a client, you as an accounting firm or a practitioner, a client wants you to come and do or to render a particular service, all right? But the price that the client is willing to pay is not something you think you may want to undertake. Therefore, you want to know whether you should accept the offer of the client or you should reject it. It's also short-term decisions. So it is in practice. We use it almost every day on the daily, almost every day. It's very practical. Okay,
Yes,
David.
sir. Okay, that's a very good example, though. But what I was thinking is that these elements that we use in our calculations, seems like they are not evolving. Like if the example you gave now, it would be difficult for us to even figure out how we can how we can analyze it with figures. Especially maybe if I'm working in a fintech, if relevant cost or maybe short-term decision applies to a fintech company, how are these things, how have they evolved to capture the recent trend, in different industries, not just manufacturing? Because we're here, it's basically direct material, labor, vanilla. That's my concern, though.
Every company has their own peculiar kind of cost. You should be able to identify from your cost structure which of them are variable, which one are fixed. Well, the bottom line is that you want to know which of those costs are relevant to the decision that you want to take. All right. Whether you are a manufacturing company, you are a fintech or service company, you understand the cost you normally incur. So from those cost structure, you should be able to identify which one are relevant to the decision you want to make, which one are not relevant. So for you to say it's not evolving, I don't know what you mean by that. All right. But in any case, like I said, you just have to. It's practical. It's practical. Irrespective of your nature of the business that you do, it's very practical. Yeah. Yes, Abdulatif.
Yeah. So I want to firstly request that, please, my question I want to ask, I need you to be valid with it. Don't just see it as a nominal question. I know you are a chartered accountant. Therefore, you are a professional, and your professionalism is valid. I am sure of that. So your wealth of experience is so fast that I just wish that if you can just tell us the aspect of the short-term decision that is examinable based on your experience with ICAN. So
I've told you earlier today now.
frequent aspect of it.
I told you earlier today. I told you. I said oftentimes in recent time, ICAN drones, it's been a while that ICAN tested the question on deleting of a cell. What is most common? The most common area is special order. And this special order can cost across different lines. At times, we can have limiting factor involving special order. You can have special order under even under relevant cost. So special order is very common. Make or buy is also common, but deleting of a segment is been a while. So yeah, that's it. Ablatif.
I thank you, sir. Thank you so much.
You're welcome. Okay, so any other questions so that we can close the class?
No, sir.
All right. So if that is the case, when next we meet, by the grace of God, we are going to be having make or buy decision. So you can just go ahead. You already have the material. Go ahead and look at, go and read about make or buy decision so that you have idea of what that is. So by the time we are going to be having the class to make life easy for everyone. So I want to say thank you to all of you that participated and waited behind. I will see you next time by the grace of God. Good night.
Good night,
Yes,
sir.
sir.
Thanks, sir.
Good night.